What is up, YouTube? What is up, guys? The Composer Trader here, and welcome back to another post-trading analysis video. And in today's video, we're going to be recapping our previous trading week. So it's a Sunday night. I did not have the time to make a video each single night because it was an absolutely crazy week. We smashed it inside of the TCT trading community. Netted over, I think it was around 15% for that week, which is an absolutely amazing performance, given that our target is between the 5 to 10%. And we're going to be discussing the trades that we took. It was mainly a trade on Solana and Bitcoin that really brought us up for the entire week. And then there were some other scalps here and there that hit a TP1, and then we got stopped out in profit. But what you're going to be seeing when you pay close attention to the trades that I take is I'm using a concept that are TCT models. Okay, TCT models are Wyckoff models, but then simplified and actually made tradable so you can become profitable. Okay, so I have an entire mentorship on my YouTube. You can go to this account, go to playlist, and you can see the entire mentorship regarding TCT schematics. And then we're going to jump straight into it because you're going to see I'm taking the same type of setups over and over again. So we're going to start off with Bitcoin, which was one of the most satisfying trades of the week because we took a TP at exactly 100K and 103K, but it was a trade that took us above 100K, which is just such a, it's such a moment to remember, But we're going to back it up with the TA and show you guys the exact moment where I entered. So I'm going to delete the drawings on the chart, and you'll realize if we zoom out that price is simply trending up. So we're very deep into price discovery. We're making higher lows and higher highs following the 6 candle rule, and therefore we draw our range from top to bottom. Just like this. Price comes back to the equilibrium of the range, confirming the range, and from there we have our initial range high and we have our initial range low that at the moment of entry were both untapped. And this is something I tell you guys all the time. Price can have many rotations inside of the range before grabbing one of these extreme points. Okay, so we have our extreme points, which is the range high and the range low, and price can have many rotations inside of the range before grabbing one of those extreme points. And you can actually play the ranges within the ranges, which is exactly what we had. Okay, so I'm going to delete the equilibrium to kind of make it more clear. And you can see from our range low to our range high, price was trending up in that most recent rotation, making a higher low for a higher high. Again, when we are uptrending, we pull our range from top to bottom, just like this. And then we have our range. And yet again, we have an initial range high and this initial range low, which is a range inside of the bigger range. We're going to make sure everything aligns up. And what you see is that after putting in that range high, we deviate that range high, coming into extreme supply. What is extreme supply? Extreme supply is the last supply remaining before taking your range high. So right here, we can see these 2 candles going up before coming down aggressively, where this actually swept the previous weekend liquidity. And then you can see that inefficiency that it left behind, making it a valid structure supply. And it's the last supply remaining, and it is protecting price from taking the range high, and therefore we call it extreme supply. And extreme supply tends to give great reactions when we are range trading. So we saw that deviation coming into that supply, and then we saw the lower high, whereas this was actually a model 2 distribution schematic. Now, the reason why I did not trade this is simply because I wasn't awake for the setup. Right here, you can see that we broke structure, and it was 3 in the morning or 4 in the morning on a Monday. Unfortunately, guys, I am not awake at those times. But you guys know, if you have studied the mentorship, that your distribution models can always go over into an accumulation model. Now, we're going to also identify, do we have some demand remaining below the range low? Now, right here, we can see the exact same thing we used at the highs, but now at the lows, where we have these 2 pullback candles that cause an expansion towards the upside, leaving an inefficiency right here. Beautiful extreme demand. Like, absolutely, it's the only clear demand that's available, and it is very good looking demand. So what happened is that price deviated that range low once, showing signs of a potential accumulation. After that deviation, we extend our range low to the deviation low, and from there we deviate the low once again, having a 1, having a 2, having a 3, which is a 3-tap model where each deviation goes lower than the previous one, and that's in other words a TCT Model 1 accumulation schematic. Okay, now at this point in time, I did not enter yet. This was on Tuesday during New York Open. This could have been a moment of entry. I just decided to be a bit more patient than normal, because even though we did have highs building up, making this somewhat of a return to zone, the return to zone wasn't looking the best yet. You know, we had these highs where each high is a lower high compared to the previous one, making this a nice liquidity trail. It was stacking up decently. Looking back, I could have started entering a position right there on that deviation coming into extreme demand, but I decided to take the more patient approach, and I was waiting to see how price was going to develop after breaking structure. Now, what actually happened is pretty significant to see, because it just shows you how effective these models are. Okay, so what happened after we put in that third tap, we go in the lower time frame, and we can see right here that we broke on around the 5-minute right there. We broke that structure back to bullish. Right here, we can fill in break of structure, and you can see following the 6-candle rule, you had 2 candles going down, 2 candles going up, 2 candles going down before breaking back to bullish, confirming the break of structure. That's also back above that second tab low right here, and therefore it is a valid entry. Okay, looking back, I kind of don't know why I didn't enter right here. It was also on New York Open, looking pretty clean. I don't know if I was like available, but looking back, you could have already started scaling in there, but I did not have an entry. Now, what happened from there is that price actually started yet again another range. So following that structure pool we just drew, you can see that we put in a higher high breaking structure, and from there we have a higher low and a higher high. But you can see the difference, right? You can see the difference between this structure pool that's looking like a very aggressive V shape and this structure pool, which is a very broad and wide V. Now, whenever you have such a wide V, you most likely are dealing with a range. So we were trending up from that break of structure. We pull our range from that high to the low, range high, range low, and this is our new range. So, going to extend that over to the right. And you'll see, hey, we have a range high, we have a range low, we got deviation 1, and from there, price actually end up manipulating above that range high and having a full-on reversal back down. We were building up an extreme good-looking liquidity curve right here. I think this happened during London. Yeah. Now, the reason why this isn't like a proper distribution model, I believe, is because we couldn't validate it using structure. No, so to validate each tap on a certain time frame, you need to use and apply the 6-candle rule. So you have 2 candles going up, 2 candles going down, 2 candles going up. That's valid. So that's a good deviation 1, right? Also 2 candles going down right here. Now on the move up, you can see right here we have 2 consecutive bullish closing candles going up and down and up. But that would mean that this is a 1, that's a 2, that's a 3, and then price put in a 4 right here. Now, we cannot also use the low time frame into high time frame rule, because if we go on the 30-minute, these deviations disappear because the 6-candle rule does not apply anymore. So even though it was indeed some sort of a distribution with manipulation above the range, it wasn't a valid TCT Model 1 distribution. Now, the beautiful thing that this little play did is that it actually mitigated the only supply that we have remaining. So you can see right here, we had this bearish order block, and price came into that bearish order block, reversed fully back down. But now there's no more supply in our way because that supply got mitigated. And the beauty is we're already in a high time frame confirmed Model 1 accumulation schematic. So we know that a Model 1 can always go over in a Model 2, where this would be the third tap from the Model 2 perspective. And then we have to grab, to validate the third tap from a Model 2 perspective, we have to grab extreme liquidity or mitigate extreme demand. And our extreme liquidity is always our first market structure pool from the low up. So right here, if I go on the 5-minute time frame, you can see right here the first higher low that's created. That is our extreme liquidity. after obviously putting in that third tab low, which would be this low right here. So we know price can come back for this low. It can complete that distribution model that was not a TCT model, but definitely some sort of a distribution model, sweep that low, break structure back to bullish, confirming that this is going over in a Model 1 that's flowing over in a Model 2, and then pump. It was absolutely beautiful. The fact that price pulls back to also sweep out all these people, and what this basically means is that the people that long here, okay, the people that long here, they all have their stop losses below the previous swing lows, which is like if you long on those low time frames, they put their stop loss below these tiny pivot point lows, which is what they're taught, right? And then what the market maker does is he recognizes all these stop losses, pushes price lower, liquidates all these people, and then when you're long and your long gets liquidated, you sell your position back to the market. And then they use those sell orders to fill massive amounts of longs. Okay, it's all explained in lecture 4 of the TCT mentorship. So right here, we swept that extreme liquidity, validating this as a third tab from a Model 2 perspective. The people know whenever you have a Model 1 going over into a Model 2, you can expect some follow through, especially with the level that we were at, almost hitting the 100K. Now, to confirm our model, we have to watch the structure coming into that third tab from the Model 2 perspective. And when that breaks back to bullish right here, having a candle close above, that is our entry. This is where we go max long. And this is exactly where we went max long, putting our stop loss below that low, having a very tiny invalidation, allowing us to have such a good risk to reward. Because guys, we took this trade up to 103K, 103.5. Look at that. Absolutely beauty of a trade. Now, obviously, I did not net 10% because I did take a massive take profit at 100K, right here, which was just so satisfying to do. So I netted around, which was this? Yeah, I netted around like 6 to 7% on this setup, which is just absolutely beautiful. But you can see that we actually had a very clean, good-looking accumulation model. It was just inside of the bigger range. Okay, it was inside of the bigger range. So very simple. TCT Model 1 going into a Model 2, entering on the break of structure where the third tab from the Model 1 perspective came into extreme demand and discount. Absolutely textbook setup. Beautiful. All these highs were also stacking up where you can see this high is a lower high, lower high, lower high, lower high, lower high. Even here, lower high, lower high. Like it was just bound to squeeze up. Okay. Beautiful schematic. Model 1 going into Model 2, entering on that break. Now, we traded the exact same plan on Solana. Okay. Exact same setup. But this time we actually entered on the Model 1 of the third tab and we added on the back test. Okay. Now, the people in the VIP community, they know that I had a very great conversation with them about all this price action in the meantime before hitting that actual target. But if you know, you know. Okay. If you know, you know. It's an amazing psychology lecture. I actually posted it on my X. So if you guys want to check that out, I gave a great lesson into the psychology behind taking trades. But to build some context, I'm just posting this for proof of work, guys. If a trader doesn't show proof of work, don't trust a trader, okay? Now, to build context regarding Solana, what we basically have is we had this massive accumulation model that we talked on X about like for months during summer. Massive reaccumulation model that actually ended up breaking out like we were expecting. And then we SFP'd our range or our all-time high, okay? Which is something I absolutely love to see because it's just a little extra liquidation event of people getting too much FOMO at once, longing to the all-time high, getting stopped out on the pullback after hitting the all-time high, and then we are ready for a continuation higher because structure from the bottom up is overall in an uptrend, right? So we can't just expect a pullback for the higher low for the higher high. But the people that have no positions from down here get too much FOMO up here, exit right here before price continues in the desired direction. It's the general mindset of retail traders, guys. So we SFP'd that all-time high, absolutely beautiful. And then from there, I was looking for some sort of swing long on the retracement, okay? And what I was noticing is that we had daily market structure, which is very significant. Going up, you can see we have 2 consecutive candles going higher. Right here, 2 consecutive candles going lower and going higher again, validating this as market structure, the 6 candle rule. So this was and is our market structure low at the time, okay? And what did we do? We SFP'd that market structure low, meaning we failed to break it. And then if you fail to break it, you can kind of look at it from a liquidity sweep perspective, which is more bullish than bearish, okay? Now, the most beautiful thing happened because the people that have been following me for a while, they know that I love a very specific type of demand. And it's when my massive high time frame range demand and structure demand is getting overlapped by low time frame demand. So technically speaking, following our structure that on the high time frame is making higher lows and higher highs just like this, this is demand, this entire massive box. Now obviously we're not going to trade that box because it's so massive, causing us to have a massive invalidation and a little risk to reward. But if you've been following me for a while, and if not, I'm telling you now, if you have low time frame demand overlapping your high time frame demand at around that break of structure, it's such strong demand. I absolutely love it. So if you go on a lower time frame, you see that price actually stalled around before breaking higher significantly. So you could use this entire zone as structure demand following your lower time frame structure that's making higher lows and higher highs, leaving an inefficiency. And that means you have high time frame demand like here getting overlapped with lower time frame demand. But in that lower time frame demand, you also had this very juicy order block, which was literally the block and the wick towards the downside before price started reversing back up. Like right in this point, price pushed higher, meaning that on this liquidity sweep that they did on the left, there was definitely some market maker involvement. They swept liquidity, boom, price pushes higher, leaving that order block behind right here, which is just the most perfect order block to bounce from. There was no order blocks lower. These were all just lows stacking up, being liquidity. This was truly the last demand remaining. So the moment price comes up here, even though it's not a reason to not take any trades if we got a trade, but unfortunately we did not get a trade confirmation. But you could always say that price, has a reason to come lower before going higher. So price went up here and actually put in a distribution. You had a 1, you had a 2, and you had a 3. Distribution model, and price continued structure from the top down that was making lower highs and lower lows. So when price is trending down from top to bottom, what can we do with our range? We can pull our range from top to bottom. Or from bottom to top. So we're making lower highs and lower lows, guys, just like this. And when you're trending down, you can pull your range from bottom to top, just like this. Now, we had that range low. We had that range high. Just like that. And then from there, we had that deviation 1 where price comes lower, goes back inside. After deviation 1, we extend that range low to the deviation low, and then we got that deviation 2, indicating a model 1 accumulation schematic like we just saw on Bitcoin. It's the exact same. There was one thing even better on this SOL trade, which is that we had a way better return to zone. Right here, you can truly see all these highs stacking up. Okay, they're all lower highs if you compare it to the high prior to it happening, which is absolutely beautiful and makes for an amazing return to zone. Okay, now I love this even more because after this third tap, there was truly no reason to come lower again from a liquidity and a demand perspective, because the liquidity got swept on the second tap and demand got mitigated. So we were looking for a break of structure, and this was actually a break of structure on New York. And now I realize why I did not enter Bitcoin. We were watching Solana. That's the exact reason. Okay, that makes sense now. That makes sense. We were watching Solana instead of Bitcoin. Okay, so you got that break of structure right here. Okay, so opened a tiny starter position right on that break of structure. But But I wanted to see a bit more because after entering, we squeezed up extremely aggressively, okay? And we swept all this liquidity because this was just like these highs were just stacking up to be like perfect, okay? Absolutely perfect. Like this is just like, if you want a good liquidity trail, this is the perfect one. Screenshot it. It's textbook right here. All these highs stacking up. You can't even draw market structure between those points. It's just low stacking or high stacking up. But I always tell my team that we have to be careful during New York, okay? We have to be careful during New York because New York tends to have aggressive moves and they can be fake moves. So what you could see is that New York opens right here on 3:30 p.m. UTC +1 and we squeeze up, sweep liquidity and then reverse back down. Like that could happen. New York does have those manipulative moves. So after entering a starter position right here, which is around a 0.5 risk if you put that stop loss below the low, which is the invalidation, I would told the team, guys, we have to pay close attention as to how we're going to be retracing. If you come up fast, but you come down twice as fast, you'll probably have a fake move and it's going to be a fake break of structure. But if you come down slowly, leaving liquidity above, we're going to go massively long. So initially, this was our entry. Enter on the break of structure, stop below the low, and you target the range high, just like this, making up for a 3.82 risk to reward. You risk $100, you make 382. Now, after that liquidity sweep, price came down like we could not have asked for a better back test. Okay, we couldn't have asked for a more perfect pullback because the pullback, it came exactly back into that demand zone where we got that sell to buy breaking structure right here, came back in it, and then the way we came down, look at that liquidity trail. All those highs being lower highs when you compare to the previous one. So then I said, word for word, guys, if we break this market structure, it's time to go. Okay, it's time to go. But the beauty is, it's in the trade management. Because initially speaking, we entered right here with our stop loss right here, which is a stop loss size of 3%. That was our invalidation. But price came back, mitigated that demand, and then broke structure back to bullish. So after this demand mitigation right here, and you break structure, there's absolutely no reason that price should go below this low again. Because if it's going to go below the low, it's going to take out this low. Because there's no demand in here that still needs to be mitigated. There's no reason to go lower from a demand or a liquidity perspective because the liquidity has been grabbed on the third tap and the demand now has all been mitigated. So if price is going to exceed this low, it's going to go to that low. That means that our new invalidation goes from this low all the way to that low. Now, you can see what that does to our risk on our trade. Initially, we had a 3% stop loss size. Now we have a 0.6, which is divided by 5. So if we were risking $100 entering on this break of structure, now we're risking only $20. But I don't want to risk a $20. I want to risk 100. So the moment we break structure, you add the $80 risk that got reduced from trailing your stop loss up back in the trade. So now you enter here, your initial entry was right there, you kind of have an average entry of here, your stop loss goes below the low, and voila, your risk to reward goes from a 3.81 to a 10.9, okay? 3.81 to a 10.9, which is just absolutely fantastic. Which is also exactly the setup that we took. But it gets even better. Because just like Bitcoin came back for that Model 2, where the Model 1 went over in the Model 2, Solana did the exact same. In that break of structure, we left behind this 30-minute demand zone right here. Okay? Making this our extreme demand and making it therefore a requirement if you want to call this a Model 1 going into Model 2. Now, on that push up, we had this distribution here on the lower time frame that I made the people aware of, pushed us back down, but we're not hesitating about the setup. We still have the same invalidation and we have the same target and we have to stick to our plan. Now, we knew there was a reason why price could potentially come back. Okay, like if I saw this distribution, I would have taken some tiny profits. But again, this distribution was created in a time where I was still sleeping, so I wasn't aware of it. So if we're already going lower, I'm not gonna just take profit randomly. Okay, we have an invalidation, we have a TP. If I saw it in the moment, I would have partial TP'd, but now we're too late. We're sticking to our plan. So price ended up moving back towards that, I call it market maker demand. It's extreme demand, but it's backed by that model 1 accumulation. We come back for it and we can apply this exact same thing. So the moment we break structure right here, right? The moment you break structure, I'm actually using the wrong pool. Let me go on the lower time frame because we did enter on the lower time frame right here. The moment that we come into this demand and price breaks structure, so you can see we came into the demand, lower high, lower low, higher high, candle close above, indicating a break of structure. We just mitigated demand. We broke structure. There's no reason that price should go below this low again, aka our invalidation now changes to this low. But that low, guys, that low is literally our entry. So we can move our stop loss to entry, being fully de-risked in the setup, but we don't want to be fully de-risked. No, we want to risk $100. So you can open up another trade right here, risking 100, right, with the stop loss below that low, and target the high. And in this one setup, you could have made almost 20% on your account balance, guys. Almost 20%. Price ended up coming back for, again, the demand in that pivot point before hitting the target, which was nerve-wracking for a lot of the people, but we already talked about the psychology behind this trade. But do you see what I'm portraying here? Again, a model 1 going over into a model 2, right? Where it's technically speaking a 4-tap, but it's a model 1 flowing into a model 2. And price tends to have some follow-through. Now, the reason why I made 10% on this trade and not more is because I'm currently still in the trade, right? Whenever I see an accumulation model that truly leaves no demand behind, because even after that other entry, we created yet again demand. I think it was on the 45-minute or on the 1 hour. Yeah, right here on the 1 hour, you can see that order block right in that pivot point. And we came back for it yet again. Now, typically, when I see price having such an extended accumulation model like I'm seeing right here, it tends to have follow through. Just like Bitcoin had follow through towards the upside, I'm thinking SOL can just have also some follow through, because right here, I'm seeing all these highs that are also just lower highs comparing it to the previous one. And I'm like, I think we could potentially run this back up to a new all-time high, right? So that's currently why I'm still in a trade. If we hit a new all-time high, I'll be very happy. I'll post some profits on my social. But that is the exact reasoning behind the trade. It's again a model 1 flowing over in a model 2, and we enter on those break of structures after hitting our POIs. So these were the two main trades that we took last week. There are always some scalps in between, which I can probably post throughout the rest of the week, but we're already going for 30 minutes. Guys, if you like my style of trading, if you like my style of teaching, you can study the mentorship that I have here on this channel in playlist format. And if you want to see me trade live, if you want to take the trades with me, profit when you are still studying, right? You can join the TCT trading community. The link is in the bio of this video. It's where I post all my setups in advance, no hindsight bullshit, just actual pure live trading. We already have 1,000 members, which is just absolutely insane. We're growing extremely fast because people just recognize value when they see it. Also very transparent with the wins that we take, but also the losses, right? We typically tend to end the day in a great profit, but nothing is 100% in trading here, guys. And if someone tells you otherwise, they're probably lying, okay? We do take losses, we just take way more wins. And actually, the last 2 weeks, we haven't really taken an L. But I'm not saying it's always like that. Even the composite trader takes an L here and there. It's part of the game. Okay, sometimes you have to be liquidity again. But I appreciate all of you guys for watching. go join the TCT trading community if you like my style of trading. And we host multiple live streams in there. And I'll see all of you. I'm gonna hopefully do one just throughout the week this time. And if not, I'll see you all next week. Peace out, guys.